Back in Taiwan, the central bank has decided not to raise interest rates. That comes after the U.S. paused its series of rate hikes. Taipei had previously raised its benchmark rate for 5 consecutive quarters. But the central bank says inflation has now eased and it's citing concerns over the country's economic outlook. For a deeper analysis on the current global interest rate hike cycle, our reporter Laurel Stewart spoke with Alicia Garcia-Herrero, the chief economist for Asia Pacific at Natixis.
Is this a cooling period after its series of aggressive rate hikes?
Well, it is complicated. In principle, when one looks at the decision, one could argue we are at terminal rate, but it so happens that Powell has been quite adamant on the fact that he's now focusing on core inflation, which hasn't come down since December 2022, actually, on the contrary. And that means that he's already hinting at a hike in July. So I don't think we're over. And that's why I think there's a repricing. The idea that rates would come down before the end of 2023, I think is clearly not on the table any longer.
So why now? Why the pause now?
I think central banks are starting to feel that they can't just hike every meeting, you see, because at some point it is going to hurt, and it has hurt the economy, especially, if you think about the banking sector, especially of course, regional banks in the US. I think they want to make sure that the financial market in particular can absorb the hikes.
Taiwan has followed the US in its rate hikes over the past year now. How, in general, is Taiwan's monetary policy tied to that of the US's?
The Taiwan economy is going through its own downward cycle in terms of the semiconductor cycle. Exports are negative for at least 6 months. So I feel that there's this feeling of no need really to do as much. Plus, inflation is obviously much better than in the US. So for these two reasons, I think little will be done, basically, again, and rightly so.